football on TV there.
This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. This after some weakness in the overnight trade. Some of this strength linked to jobless claims coming in better than expected. Also yesterday we had Janet Yellen testifying, and I find it very interesting now that she is focusing on the labor participation rate, which is near a 30-year low, and less on the unemployment rate. To me, this suggests that the Fed is looking for reasons to delay an interest rate increase, even though the consensus view is now for the Fed to raise rates sometime in the second half of next year. I believe that it will probably be much later when the Fed actually does raise rates. So if we are correct in that thinking, that rates will stay low for a longer period of time, stock index futures will continue to advance, and I think this is a long-term trend. Over in the currencies, we had the euro currency advancing to multi-year highs. This after Mario Draghi, in his statement after the ECB meeting, talked up the Eurozone economy. However, the euro quickly fell when he hinted of the possibility of the European Central Bank lowering interest rates at their June meeting. Also, we had gains in the British pound. This after better than expected house price numbers. Also seeing good gains in the Australian dollar. This after employment numbers coming in stronger than expected. Longer term, we feel that the dollar index will continue to decline, which just today made a new 6.5-month low. The yen will probably weaken as the Japanese economy likely comes under pressure. This after Japan increased their sales tax April 1st, which is likely to slow their economy, and we are looking for continued gains in the British pound. Over in the interest rate markets, Treasury bonds higher as the yield on the 30-year bond closes in on 11-month lows. Also, we are seeing the yield curve flattening, which would support the back end of futures over the front. And if we are right in our thinking that interest rates will remain low for a much longer period of time than most analysts are thinking, the entire complex is likely to work higher, but we feel any gains will be led by the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.